Yo, what's up, guys? Welcome back to another video. I've tried to record this video twice actually, but I always gotta have some problems and interruptions. But we continue. All right, so I doubt this video will get a bunch of views because it's not going to be focused on concept. It's not going to be focused on how to become the best trader in the world. It's not going to be focused on this concept will make you a lot of money or give you that good entry. It's not focused on that. It's focused on why I think a lot of traders fail. And one thing that's just kind of been frustrating me and about the space is just all these concepts. Okay, with all this my forex fund situation, if you don't know, in the prop firm space, that prop firm is probably getting shut down and probably not coming back. There's been a lot of people going into different props, their community, checking them out. And this goes before then. It's all over Twitter as well, where people are bashing other trading strategies and concepts. People are bashing support and resistance. People are bashing supply and demand. People are bashing ICT, smart money concepts. And I can just imagine, as a new trader, let's say a new trader is trying to learn how to trade and they really want to put the work in, and they start trading one of these concepts, and then they see everywhere on Twitter or in discords that they shouldn't be trading that because it doesn't work, that's not real. Imagine how they feel. Imagine they're doing good, and then they just see that everywhere on social media, and then they start getting in their own head, and then they kind of start realizing and start seeing, oh, their concepts aren't really working every day. It's not working when it should work, how they learned it, and they quit, or they go to a new concept and then it does still the same thing. They quit. But what I want to talk about is kind of how most traders and new traders that focus just on the concept, solely on the concept, especially on the lower time frames, spend hours and hours on it, but they still fail. It's because I think they're skipping 2 steps. Okay, so I'm talking about 3 steps in this video, and again, you can just listen to this. You don't have to watch. So step number 1, I feel like why most traders fail, and they skip over this step, and it's pretty basic step, is getting a bias. And I don't mean going on Twitter or looking up, like I'm looking at Euro USD right now. I don't mean going on Twitter or looking up Euro USD in the search bar and seeing what everybody's saying, and then you follow that. I don't mean that. I don't think you should do that, because especially myself, that screwed me more times it's helped, because I have my own bias. I've done research on the fundamentals. I've looked at the higher time frame trend. I understand the trend of the market, and I think Euro USD is going to go short, for example. But then I go on Twitter, I see a lot of people, a lot of big influencers, they're showing their charts, they're showing their technicals on the hourly, 5, 15, 30 minute. Oh, we're going long here, going past these highs because we have a break of structure here on the 30-minute time frame. They didn't do any research on the fundamentals. They didn't do any type of higher time frame trend, or looking at the trend on the higher time frame. They didn't do any of that. So I think, oh, they must be right, because they have a lot of likes and a lot of people in their comments saying thank you for this. And then next thing you know, I get stopped out, and my higher time frame bias, if I would have stuck with that, stuck with my research I did on the fundamentals, it would have worked. So I don't mean going on Twitter and getting a bias from there. I mean actually doing research, looking at the fundamentals, looking at the higher time frame, monthly, weekly, daily chart. Don't be glued to the 5, 15 or minute, 5, 15, 30 minute. Hourly is not too bad, but hourly can sometimes be low chart, and expecting every supply and demand zone to go in your favor, every support and resistance to hold up, every bullish for value gap to hold price up and then bounce from there. Don't expect that, because that's not going to happen. Listen to this. If the higher time frame trend and the fundamentals match up together, and let's say Euro USD is bearish, why would the lower time frame, 5, 15, hourly, 30 minute, whatever, bullish, demand zone or bullish for value gap or support at this area, after you have that break of structure on the lower time frame, hold up? It's most likely going to get disrespected. That's how that works. Okay, and then you have people trading it on the lower time frames, and it gets disrespected. And they're like, "Wait, price should have bounced at this demand zone. Why did it not bounce at this? Is a demand zone, isn't it?" Well, because the fundamentals in the higher time frame bias is against that, trending down. So you have a better chance of looking to sell at the highs rather than buying at the lows. The probability is in your favor to do that if the higher time frame bias, the fundamentals of the pair, the currency, whatever, the indice, whatever you're trading, is in your favor. Then you shouldn't really be looking for that, and you shouldn't be confused if your lower time frame bullish pattern entry fails. Now, sometimes can the trend flip on you on the higher time frame randomly? Yeah, but you got trading is a probability game. So that's the first step I want to cover is don't focus on your trading strategy or your concept. Forget about that. Okay. Don't go in the lower time frames and expect this demand zone, this fair value gap, this order block, the supply, demand, support, and resistance to hold up here on the 1 minute, 5 minute, whatever. Don't do any of that. Do some research. Look on the higher time frame, see how the market's trending. Next step, we're not into our concepts yet, is to this is an easy one. Sell at the highs, buy at the lows. It's as easy as that. If our higher time frame bias and the fundamentals match up together with that is for Euro USD to trend lower, I'm not going to be scared when Euro USD starts to move higher, because that's an opportunity for me to go short, because you should be selling at the highs if your bias is overall short. Okay, you should be selling at the highs. Same thing goes the opposite. Let's say Euro USD is trending up on the higher time frame, our bias is higher prices for price to go higher. Then we buy on pullbacks that make a low. Okay, so for example here, I know I said you don't gotta look at the chart, but when price moved up right here and pushed up pretty high, and this is on the monthly time frame, so same thing on the daily, weekly, a lot of people are going to be, a lot of people would mark this as a demand zone, by the way, or order block, whatever, and they're buying here when it pulls back, and they're looking at their fib and they're buying on the fib retracement. But we know the bias and the fundamentals for Euro USD are actually bearish. So this is an area where we're expecting this to get disrespected. We're expecting this demand zone to fail. We're entering shorts here because we know that, because we've done our research, that the higher time frame bias is bearish. And a lot of people are looking at this. This is a monthly time frame. A lot of people are seeing this move up on the, weekly, or I would say daily, 4-hour, hourly. They think this Euro USD is extremely bullish, right? It did have, a good 3 months of movement here to the upside. But then they go to the lower time frames here. They see this bullish area where price should bounce right here and make a new high. But they're not looking at the monthly. They're not looking at the fundamentals where the trend is ultimately lower. So they're buying these areas when we come down. And look what happens. It fails. Why does it fail? Because they don't do step one. They forget step one. They're too focused on their lower time frame TA, their technicals, and it just fails. And then they get confused and they quit because they think their trading strategy just doesn't work. So get your bias. Understand here, Euro USD is obviously trending down, and we're now at where we're at currently. So if you don't look at the chart now, you can. But what I'm mainly trying to say here is we know the trend on Euro USD is trending down. We know the fundamentals are down. So these any pullbacks up are areas where we should be looking for shorts. Before we look at any TA, before we look at, I guess it's technically this is TA. Before we go in depth and concepts on the lower time frames, that's what you should understand. If price is moving up, so many people get so scared to sell at the highs because they think it will keep on going. But I can't tell you, most of the times when you sell at the highs, it will go in your favor a lot of the times. Does it always go in your favor? No. But it usually goes in your favor when you sell at the highs, buy at the lows. I know that's like a meme saying sometimes, but it genuinely is. It could be a good strategy, but you shouldn't just trade based off that. You should do step 1 first, and then step 2 is waiting for price to move up to the highs so you can enter sells, or move down to the lows so you can enter buys. Then step 3, that's where your concepts come into place. So do step 1 first. Okay, it will help you so much. I'm telling you it will. Understand that if you just spend some time doing research, a lot of people will hate fundamentals. And I'm not someone saying that, fundamentals are better than technicals. Both people can argue both ways. But why not have both? Why not look at the fundamentals? Why not look at the higher time frame, trend? Because at the end of the day, that's just going to help your probability whenever you enter a trade. If the fundamentals and the higher time frame is supporting your trade idea whenever you start using your concept, the probability of that trade working out increases. Let me show you an example. So I'm looking at the chart here. So if you are here, try to look if you can. But I'm on the 4-hour time frame. We know Euro USD has been trending down, correct? Euro USD has been trending down. Actually, let me go to the hourly here, because this is a better example I want to show. So this move up, we have a move up on Euro USD. Okay, people see this break of structure here, they see this break of structure here, and I'm looking at the charts. I'm not looking at past price action. This is not me looking over here noticing. Like, if I was actually doing this the right way, I would notice on the higher time frames, even by just looking to the left, the overall trend is bearish. You go to the 4-hour, daily, weekly, or not 4, but if you go to the daily, weekly, monthly, you would see there's no structure break to the upside. This is still trending down. Just because we have a structure break on the hourly doesn't mean we're just going to blast off. But a lot of people think that way. A lot of people think that way. And then they get confused because their trading strategy failed. So what do I mean by this? Pay close attention. Let's say I'm hopping into the charts. I'm a new trader. And I'm doing ICT smart money concepts for an example, because I trade that. I trade multiple concepts. I like to trade ranges. Sometimes I trade, different concepts, right? You can do that. Doesn't matter what people say. But let's say I don't have my higher time for bias. I didn't do any fundamental research. So I'm just trading the concept on the lower time frame. Hourly is pretty low time frame. So I see this area right here. Okay. And I know a lot of people would say this doesn't have a top wick. And what that means, if you don't know what a top wick or bottom wick is, a lot of people say if a top wick wasn't formed, price most likely will come back up to that area. Same with the bottom wick. Kind of like how here we didn't create a bottom wick here. You see we came back down the next candle, create that bottom wick, and then price came up. So a lot of people think price will reverse maybe here to come up and to break this high, because we have, why wouldn't it, right? We have this break of structure here. Why wouldn't it, come up to this area? If you don't trade smart money constantly, you trade supply and demand. Well, I know a lot of people call this a demand zone, right? But look what happened. It failed. It just pushed through that. It didn't even care about your demand zone. It didn't care about your fair value gap. And then they see that, and they just see it absolutely disrespect it on the lower time frames. And they say, oh, this stuff is just BS. This technical stuff doesn't work. These concepts don't work. They see, they had resistance here. They broke past the resistance. Oh, we should bounce right here, right? You have to know, look at how all these concepts kind of play together, right? We have resistance, we have demand, we have a fair value gap. So everybody's thinking price is just going to bounce when it touches this area. When it comes down here, we should bounce off this fair value gap. We should bounce off this demand order block and come here to make this high. And it doesn't do that. Just it didn't care about any of that. Why? Well, let's go to the daily. Look at here. This is where we were trading or expecting price to bounce. But all this was, it just took out this high and went lower. There was no higher time frame, big structure break in price. This was our swing high. This was our swing low. We didn't break past this swing high. Okay, so that's what I mean about understanding how the market's moving. Same with the weekly. This thing is just trending down. We had a somewhat of a swing low here, and we broke past that, and we're just continuing down. There's no structure break on the weekly, on the daily. So going back to the hourly, you're buying at a pretty high price. So if you didn't follow step 1 and 2, you'll be the one buying at this support resistance, buying at this demand order block, buying at this fair value gap expected price to continue up because you see this hourly break of structure. But if you follow step 1 and 2 and have your higher time frame bias, your daily bias, noticing structure still to the downside, looking at your weekly bias, noticing structure is continuing down, big red candles to the downside, then you would know, if you go back to the hourly, well, we're at a pretty significant high. Structure is still bullish, so there's a high chance this thing will probably disrespect all of this and just continue the trend as the fundamentals and the higher time frame bias and trend is still bearish. So there's a good chance it just disrespects all of this stuff here that a lot of people are trading, expecting this to go higher, and just disrespects it because a higher time frame bias favors that. So that's step 1. So if you understand step 1 and you have a bias, well, you won't be entering long here. You would think this is risky. You would think this is not a high probability trade because the higher time frame bias and trend doesn't support it. So now that you do that, you're telling yourself, okay, well, this will probably fail, so I'm going to wait for this to fail, right? We have a high that we could potentially sell. What is step 2? Sell the highs, buy the lows, depending on your bias. So if our bias is on the higher time frame, fundamental wise is short Euro USD, then we're looking at this range area to look for sells because we're selling at the high. Step 3 comes into play, which is actually using your technicals and your lower time frame concepts to then enter short. So if this is going to fail, we expect that. So then we start playing on the short side of things. And that's when our concepts come into play. And that's when they start to work. All of this price action here, all of these bullish for value gaps, all of this demand, all of this support resistance, it's going to fail because the higher time frame is telling you that. Your fundamentals are telling you that. So how can you take advantage? Well, you actually, now your concepts come into play. Now it'll look more clean to you because it actually makes sense. And you enter short off of your, a lot of people will call this a supply zone. Look how that supply zone worked. A lot of people will call it an order block. Look how that order block worked. A lot of people will call this a fair value gap. Look how that fair value gap perfectly came up to price. Candle bodies closed right inside of it and sold off. Look how that works now. Because a higher time frame bias that you should have done in step 1 is favoring that concept to go short there. So I hope this makes sense. Okay, and I hope this helps you become a better trader. And this is not me telling you a concept is better than the other. I trade all concepts. Okay? I do think it's good to stick with one. But don't forget step 1 and 2. Don't forget to look at your higher time frame, understanding that the trend on your USD, if you look at the ultimate time frame on the monthly, is bearish. You look at the trend on the weekly, we're trending down. You could see this right here, this bullish fair value gap, it got disrespected. So that should tell you The trend is down. You can see we're obviously trending down. The fundamentals favor EURUSD to go down currently on the higher time frame. So now that we have that, we go to step 2, which is okay, if we think it's going to go down, then we're waiting for a pullback to go short. Okay? This would be an idea in favor your step 2. A lot of people are going long here because they see this breaker structure and they see this gap and they think this is demand, whatever, and they think, okay, this should hold up because this is what these concepts tell me, that there should be demand here. But guess what? They didn't do step 1 or step 2. So you did step 1 and step 2, so you know this is an opportunity to go short, and you understand that this demand, whatever here, is going to fail. And then step 3 is when you start putting your concept into play. So if you trade your fair value gaps, you enter here, etc. If you trade your order blocks, you can enter off here. If you trade your, supply, people call this supply, you trade off there. If you trade your resistance, support and resistance, well, you have support here that failed, and then you flip to resistance, so you trade the retest of that. See how all these concepts ultimately work the same way? So we know they all work in their own different ways. Everybody visualizes each concept different way. Some people like the complexity of ICT concepts. Their brain, it works. It's a better fit for them. It makes more sense for their brain. Some people just like the simplicity of support and resistance. It sees support here, breaks below it, resistance. But they forget step 1 and 2. Get your higher time frame bias. Understand the ultimate trend. Sell high, buy low. Then put your concepts into play. That's going to be all for me. Hope you guys enjoyed this video. Hope it was helpful. Really tried my best with this. I hope it cleared up a lot. I'm telling you, this helped me a bunch. Okay, I remember I got into trading and I didn't do any of that, and I was on the 5-15 minute hourly, even trying to trade these concepts, trade support resistance, and it just kept not working, kept just breaking levels it shouldn't break, because I learned it should be demand there. I learned there should be support there. But then I started using the higher time frames. I started doing actual research on the fundamentals. I started reading. I started looking at articles. I started reading the data, looking at the data. And then that helped my probability on the lower time frames, and understanding that these levels will most likely not work out because the higher time frame doesn't support it, the bias doesn't support it. So then we get on the right side of the market, we enter our trade, we have our step 1, step 2 done, we get our idea, we get our plan, and we trade the plan, we execute, and we dominate. So I hope this was helpful for you guys. Again, I don't know how many views it's going to get. I do not care. I just know whoever watches it will probably help you. If it helped you and you know somebody it might help, share it with a friend. And yeah, see you guys in the next video. Join Telegram down below if you would like. And peace.